These 6 things could totally nuke the cryptocurrency markets in the coming months. First, March 10th, that is just a couple days away, by the way. That is when Mt. Gox creditors are set to finally start getting their coins back. Now, the deadline to complete payouts is actually by September 30th, so it could be a bit of a process as people put their hands up and say, I'll take my coins now. But that's a total of 142,000 Bitcoin that are going to be entering markets over the coming months. 2 groups of creditors controlling about 20% of that Bitcoin have already come out and stated they're actually taking back 90% of what they're owed in Bitcoin, the other 10% in cash. So not likely to be selling immediately, those guys. But the fate of the other 80% of those Bitcoins, it's in question. That's 113,000 Bitcoin. Will a lot of people take that Bitcoin and just hodl it? Probably. I mean, you gotta think. There are a lot of OGs out there like Bitcoin dev Adam Back who are probably just going to hold on to their coins. They don't actually need to be selling them. But even 20 or 30,000 Bitcoin hitting the market and being sold could cause a lot of short-term price turbulence. Although not all the coins, of course, are going to hit the market at the same time. Again, that's up until September 30th that people have to claim these coins. Now, how much am I worried about this? Not massively. In fact, more than anything, perhaps this story finally coming to the end is going to just be a good thing. People are going to get closure. The market gets closure. The FUD goes away after we take a potential short-term hit from a few of those sellers dumping their coins on the markets. Next, let's talk about the coming release of the inflation data on the 14th and the Federal Reserve meeting on the 22nd of March. Now, inflation has been trending lower for months. That's a good thing. That's a very good thing. Although it's still over 6%, which is not a very good thing. But what we need to see on the 14th is for inflation to drop again. Now, if we had an unexpected spike in inflation in this month's data, then buddy, that's gonna be bad news bears for the markets. A further drop, markets are probably gonna be pretty happy, at least finding reasons for some kind of optimism. Now, I don't even want to think about the exploding heads if inflation stays the same and nothing changes at all. Anyway, this will all likely affect how the Federal Reserve then approaches interest rate hikes on the 22nd. The market is basically expecting a 0.25% increase from the Federal Reserve, potentially 2 more hikes of the same size in April and in May, after which many pundits are expecting the Federal Reserve to stop. But that is only if inflation keeps falling, with some, of course, fearing that rates could actually go up as high as 6% in order to try and tame inflation. So let's all hope for lower numbers on the 14th for inflation. How much am I worried about this? So far, so good on inflation. But these kinds of macro stories can totally derail markets real fast, so stay frosty. A higher inflation number than expected could be bad. The next massive FUD story right now for crypto is the Silvergate bank collapse. Now, if you haven't heard of Silvergate, it was basically the go-to bank for a lot of cryptocurrency exchanges and major market players. So anybody looking to on or off ramp fiat currency in and out of crypto, that was the bank to use, man. They were massively exposed to FTX and they got smashed bad when it went under. They lost about $1 billion in Q4 of 2022. Ouch. It is very important to note that the vast majority of companies that had been using Silvergate, they've already cut ties with the company. The overall impact to crypto, probably not going to be that super severe. Unless, of course, all those companies are lying and they're actually just balls deep exposed to Silvergate. How much am I worried about this? Not massively worried, but this story does still have the potential for some kind of unexpected chaos if some players get caught swimming naked. They're lying, saying that, well, we don't have that much exposure, but they're actually really, really deeply exposed, right? That could still happen. Wouldn't shock me. We've seen that happen plenty in crypto. By the way, if you struggle with finding the time to hunt down airdrops, find that alpha on altcoins, the latest and best of decentralized finance farms, the latest, hottest NFT mints, I got you covered, because you need to get subscribed to the Wealth Mastery newsletter. This is my weekly crypto investor report, and you can join our over 55,000 readers by signing up for free using that link down below in the description, and stop missing out on all of the free alpha. Now, the next factor to keep an eye on, of course, is the regulatory insanity that we've been seeing. Look, the last few weeks have been some of the most insane in terms of crypto regulation FUD I've ever seen. The SEC in the USA is going hard after crypto. They've been attacking staking. They've been attacking stable coins. They've been attacking exchanges. Operation Choke Point 2.0 is out there seeking to debank crypto companies in the USA. say, is a backdoor way to kind of screw crypto. The SEC is trying to argue that basketball NFTs, basically basketball cards on the blockchain, are securities. They've even stated that everything except for Bitcoin could be a security. At least that's the opinion of SEC Chief Gary Gensler, not official ruling from the SEC. I think we're going to see a lot more bad stories coming from the regulation front from the SEC this year. This could just be the start of a lot of bad stories, so prepare for chaos when it comes to regulation. Now, how worried am I about this in particular? This is probably the most concerning one that we're talking about today, although the other things could have some more concerning elements to them too. But bad enforcement actions lead to bad precedents, which lead to a screwed crypto industry in the USA. You want to see the USA be deep into crypto. You want people to be able to get this. Lawmakers actually, they need to make some damn laws here and stop the SEC from being such a bad actor and just trying to sue everybody and trying to regulate that way. If that all wasn't bad enough, we have our newest round of Tether FUD. Now, following on a month after the SEC hit the BUSD stablecoin in their issuer Paxos, basically what we're seeing with the new Tether FUD boils down to this. A Wall Street Journal article alleges that Tether used fake documents to open up bank accounts for their dollar deposits. Strange how BUSD and USDT, the two biggest stable coins, both are getting hit really, really hard, but USDC, the biggest competitor of those two, they appear to be fine. Now, that couldn't have anything to do with Circle's deep connections to BlackRock, could it? Nah, it's probably just a coincidence, right? Right. Anyway, Tether has long been a sticky issue in crypto. Look, their founding was shady. There's been all kinds of, audits and stuff that have been few and far between and leaving a lot to be desired. Tether collapsing, if it were to collapse, it would totally screw markets. But it would also just mean that USDC and DAI, they would take over market share from Tether, right? Machiavellian kind of game stuff here, right? The impact, though, in the short term would be brutal, so let's hope it doesn't happen. Now, how much am I worried about this? Well, we have been getting Tether FUD stories half a dozen times a year since it was founded like 8 years ago, whatever. Probably another nothing burger, more just Tether FUD, because that's what the market does, Tether FUD. Then in April, we get the big thing, of course, for markets, which is the Ethereum Shanghai upgrade. Yeah, surprise, it's been delayed until April now, but still, it is coming, and there has been a lot of fear around the potential unlocks and, of course, the potential sell-off of the millions of Ethereum staked currently. So let's talk about it. First, it's important to understand that although there's like 18 million Ethereum staked right now, that not all of that Ethereum is going to get unlocked at once. It's not how it works. Even if every single person staking Ethereum right now wanted to exit, it would take about a year to get everyone through the queue because only a certain amount of Ethereum can be unlocked every single day. So not exactly a sell-side Armageddon from that. Plus, a lot of validators, they're not going to be unstaking at all. They're going to stay in. They're just going to take their staking rewards and then restake and keep earning those rewards long term. The one concern, though, is the staking rewards, which can be withdrawn immediately, and that's about 1.2 million Ethereum. But even then, not all the validators are going to be able to withdraw that Ethereum because they haven't updated the damn client credentials in time to be able to do that. And likely a lot of that ETH currently staked will be restaked because a lot of it's going to be in the hands of liquid staking protocols, and they'll restake that ETH. So maybe a few 100,000 ETH at a maximum could be hitting the markets when this upgrade goes live. We're within 4 or 5 days of that upgrade going live. That could cause some turbulence to hit the Ethereum prices without a doubt, but probably not too severe. And yes, validators, some of them are going to exit at a loss. Currently, only 16% of stakers are in profit. So there will be sell-side pressure from validators exiting the market. But again, only so many can exit per day, and it's going to take a year for all of them to get out if they wanted to. So how worried am I about this? Well, I think the fears of the great Ethereum staking unlock Armageddon, it's a bit overblown. Yeah, there's going to be selling, but it's not going to destroy the market. It's not going to crash Ethereum down to like 10 bucks. Hope not anyway. It'd be cool if it did. So everything is not as bad as some people may be making it out to be right now in crypto. The regulation thing, definitely the biggest concern though. And to be clear, I still think 2023 has great potential for a rally for Bitcoin up to as high as $48,000. That's just my personal opinion, but we must also keep a sober view on the threats to the market and how they could affect prices and sentiment for all major crypto assets moving forward. Okay, that's it. Subscribe now. See you next time.